That overdraft notice arrived inside the May 2023 statement. It listed three fees of $34 each, charged in a single day on an account that showed income coming in. No teller approved those fees. No manager reviewed them. The decision began with the order your transactions are posted, a sequence you never see. By the end, you will know which account is quietly costing you money and the three documents that can stop it. This is Capital Macabre, and this is an evidence-led investigation into the checking account fee machine. 4 questions drive it. Why do overdraft fees exist? Who decides you owe them? Who keeps the money? And what can you do about it tonight? The record comes from the Consumer Financial Protection Bureau, the Federal Reserve, the FDIC, the OCC, the Federal Register, the Public Consumer Complaint Database, and the bank's own announcements. We will not exaggerate. Every number here is published. Every quote is on the record. Where the bank disputes, you will hear the bank's position, and you will leave with 3 documents to request and a 5-step checklist for your own account. The system is not hidden. It is buried in the paperwork. Tonight, we dig it out. Start with one complaint file. Complaint 7,009,900, filed May 22, 2023, from Connecticut in the CFPB's Public Consumer Complaint Database. The database tags the filer as a service member. It does not publish a name. What the customer believed was reasonable. The account always had income coming in, paycheck to checking, month after month. The statement showed something different. Multiple overdraft fees of $34 each, several in a single day. The complaint alleges the bank processed higher transactions first so it could charge overdraft fees, an allegation, not a verdict. The database also records the company's response, closed with explanation. The customer called and asked for a manager. Both declined to refund the fees. Their closing words are in the file. Yet the little income I make, Chase also takes it with its overdraft fees. One complaint is a story. Several are a pattern. In May 2024, a Chase customer in Illinois filed a second complaint, 5 fees of $34 across 6 days, more than $200, on an account that was never overdrawn by that amount. That file is marked closed with monetary relief. The fees came back, same bank, same fee, opposite endings. The difference was not the customer. It was which process answered the phone. So how does a bank convert a thin balance into a steady fee? Follow $1. Your paycheck lands in checking. The national average interest on checking is 0.07% a year. Technically, the bank pays you almost nothing and lends your balance out at far higher rates.
Then you spend. Every debit waits in a queue. When the queue clears, the bank picks the order. Here is the documented part. For years, many banks reserved the right to post the largest transactions first. The rent posts, the balance goes negative, and every smaller purchase behind it becomes a separate overdraft, each with its own fee. The order is not gravity, it is policy. The Pew Charitable Trust documented that no federal rule governed posting order, and banks reserved the right to reorder in ways that maximize fees. A California case, Gutierrez v. Wells Fargo, forced one bank to change its sequence. Now the second mechanism, authorize positive, settle negative. The card is approved while your balance is positive. By the time the merchant settles, other transactions have drained the account. The fee arrives on a purchase you were approved to make. In September 2022, the CFPB ordered Regions Bank to refund $141 million and pay a $50 million penalty for this practice, which the Bureau called surprise overdraft fees. The FDIC and the OCC later warned these fees create risks of unfairness. And the third layer, overdraft protection. Link your savings, and some banks charged a transfer fee every time they moved your own money. Bank of America charged $12 per transfer. It protected the fee, not the balance. The bank eliminated it in 2022. Who makes these decisions? No person. A posting engine running terms you accepted once in a document most people never open. Who gets paid? The bank. Who carries the risk? You. The fee is not a fine for spending. It is the price of credit, extended without a single disclosure a lender must print. Now the scale. In 2019, banks reported $11.96 million in overdraft and NSF fees. By 2023, that fell to $5.83 billion, a drop of more than half. Researchers who include credit unions estimate consumers still paid roughly $12 billion in 2024, and the burden is not spread evenly. CFPB data cited by the Congressional Research Service, about 9% of accounts generate roughly 79% of overdraft and NSF fees. The people paying are the people the bank can predict. The median fee is $34. The median debit overdraft is $24, repaid within 3 days. In lending terms, the CFPB wrote, that is a 17,000% APR. Most consumers who overdraw recover within a week, and about a third of consumers charged fees in the past year report balances of $500 or less. Low balance is the entry ticket. Now the response, because it is real. In December 2021, Chase announced Overdraft Assist, no fee if you're overdrawn by $50 or less at the end of the day, and 1 day to catch up. Chase says it now posts debits in the order customers see them in its app. Bank of America cut its fee from $35 to $10, eliminated NSF fees, and said overdraft revenue would fall 97% from 2009. Wells Fargo added a 24-hour grace period. Capital One, Ally, and Discover dropped overdraft fees entirely. Then the regulators moved. In December 2024, the CFPB finalized a rule capping overdraft fees at $5 for large banks, a rule it said would save consumers about $5 billion a year.
The banking industry sued. In March and April 2025, Congress voted to repeal the rule. On May 9, 2025, the president signed the repeal into law. Banks called overdraft an essential financial lifeline and warned that caps would push consumers toward payday lenders. That counterargument deserves a plain statement, but the CFPB's published position was equally plain. A 17,000% loan, charged without credit disclosures, collected mostly from accounts with thin balances. The regulator and the industry could not even agree on what the fee is. That disagreement is the story. If you know someone who keeps their paycheck in an account they have never read the terms of, send them this investigation. That is the only ask. Here is what most coverage misses. The real issue is not that banks charge $34 when your account runs dry. It is that the checking account itself is the product, and the fee is the price of credit extended without a single disclosure a lender must print. The same account pays 0.07% and funds loans priced far higher. In its 2014 study, the CFPB found overdraft and NSF fees were more than half of all fee income on consumer checking accounts. Free checking is not free. It is paid for by the 9% of accounts that go negative. And here's the uncomfortable part. The wrong account is not the one with the lowest balance. It is the one's terms you never read. The posting order, the authorization rule, the opt-in box, the transfer fee, the fee schedule nobody quotes. That is the account the bank is counting on. Protection, in order of priority. 1. Inspect your last 3 statements. Look for same-day multiple fees and compare the order your transactions posted against the order you actually made them. 2. Request the document, your full account agreement and the current fee schedule in writing from the branch or the app. Ask one direct question. In what order are my transactions posted? A chronological bank answers without hesitation. 3. Compare numbers. Your overdraft fee against the $34 median, your checking interest against the 0.07% national average, and against what an online savings account pays. Money earning nothing while the bank lends it out is the definition of the wrong account. 4. Watch for warning signs. An opt-in mailing asking you to approve debit card coverage. A fee on a purchase authorized while your balance was positive. Multiple fees in a single day. A transfer fee on overdraft protection. Call before you pay. Ask for a one-time waiver and keep the result. 5. If the answer is no, escalate in writing. National banks report to the OCC. State banks report to your state regulator. Your state attorney general's Consumer Protection Division takes written complaints. Keep every statement. Keep every call log. The fee has a paper trail. So can you. Go back to the May 2023 statement, the one with 3 $34 fees in a single day. The customer read it as a penalty for running out of money. It was actually a bill for credit they never agreed to buy, priced at a rate a payday lender would hesitate to print, and decided by a posting order they never saw. The question is not whether the bank can see your balance, it's whether you can
see the fee before it lands. Next investigation, the score that decides your insurance rate, and the one document the insurer hopes you never request. The system is not hidden. It is buried in the paperwork.